Hi everyone, welcome to another Weekly Forex Forecast for the week ending January 22nd, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the euro, the pound, the dollar yen, gold or XAUUSD, as well as the cryptocurrency VeChain or VETUSD. Some markets reversed last week like the EURUSD. The dollar yen is still holding below a critical level. However, today I want to focus on gold. I'm going to show you a new pattern there, and I'm also going to give you an update on VeChain, which has done incredibly well for us since we bought in last year. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. First up, we have the EURUSD, and as I mentioned in the intro, this one did reverse last week. We got that close below 121.50. So this is the level that I've been talking about for a while, where if we saw a close below 121.50, that could signal a rotation lower into 120. All right, so because this is a round number and it's also the top of this multi-month consolidation back here, I do like the idea of a move into 120, and it's going to depend on what happens around here as to whether or not the EURUSD stays constructive. In other words, is this just a pullback following this monthly breakout from the symmetrical triangle, or is it something more? So you can see here on the monthly time frame where we had this breakout back in July, the pair moved sideways for several months and recently broke that 120 area. So where January goes from here is going to be critical. If we do see a bounce from 120, that would keep the pair constructive following this breakout in July. And furthermore, if we look at the daily time frame, there's actually a trend line here in addition to that horizontal level, where if I draw this trend line connecting with this low back here, as well as this one, we do get a confluence of support right around that 120 area. So this is going to be a critical region for the euro this week. If we do bounce from there, the pair stays constructive and moves higher back into 121.50 and perhaps 123.30. Alternatively, if the pair does break below 120, that could expose some of these recent highs on the way down. It may even expose that 116.15 area, which was the bottom of this range in 2020. So I went ahead and exited a little bit more of my long position last week. Remember, I was buying the pair on this candle, and depending on where we open in the new week, I'll probably go ahead and exit the rest. I was getting out up here once we started to rotate lower after retesting 123.30. And I don't want to hold this if we do get a retest of 120, and especially if the EURUSD does start to break below that 120 area. But all in all, as far as new positions, I'm just going to stand aside and see what happens this week around that 120 confluence of support. Bullish price action from there could send the euro higher, while a daily close below it could send the euro back to some of those recent lows, and perhaps even trigger a move all the way down to 116.15. Next up, we have the pound, and I do want to start with the monthly time frame. We've talked about this falling wedge for the last few weeks. You can see where we have this upper level from the 2007 high, and then we have this lower level based on this 2001 low. Now, this pattern did signal a push higher from the pound. We see that the pair did close above it back here in December. So you have to be careful if you are looking for weakness from the euro or the pound, just because the pound is still above that area. So as long as this region between 134 and 135 stays intact as new support, all right, so this area right through here is intact as new support on a monthly closing basis, you have to be careful trying to short the pound. And in fact, while it's above this area, I do favor looking for buying opportunities. Furthermore, if we look at the weekly time frame, this area around 134.80 is something I've mentioned for a while, where the pair stayed below it for about 18 months, and it recently closed a week above that level, retested this 137 resistance area based on this low back here, and we're now seeing a retest of 134.80. Now, if we do see the pair rotate lower and close a week below this area, it could indicate that this was a false break and send the pair lower. But like I said, based on the monthly time frame, you've got to be careful trying to short the pair just because it is holding above that breakout area on a monthly closing basis. So this is a situation where if you're unsure of what to do, it's best to do nothing. As I've said recently, the pound needs to get above this 137 area on a weekly closing basis to expose the 143.50 region. Alternatively, a close below 134.80 could send the pair lower, but just keep in mind that the pound has been really choppy in recent weeks. So again, if there's nothing to do, it's probably best to just stand aside. Of course, that's just my opinion, but that's what I'm going to be doing this week. So the dollar yen is still holding below a critical trend line that I mentioned recently. A few weeks ago, I talked about how this low down here did produce a trend line based on this March low. You can see where last month did close below this trend line, and so far that 104 area is serving as resistance on a monthly closing basis. So dropping down to the weekly time frame, you can see just how choppy the dollar yen has been, and this is why I haven't traded it. Notice how back here, these swings, even though they were a little bit choppy, they weren't nearly as choppy as the dollar yen has been over the past year. That said, you can see based on this trend line how the pair is holding below it on a weekly closing basis. This is not a great selling opportunity in my opinion, because again, the pair is sideways, and this also wasn't really a bearish candle. All right, it is holding below 104 on a weekly closing basis, but this isn't what I would call a bearish pin bar, at least not one that I would want to sell. So as of right now, the dollar yen is unclear. We have this 103 support area on a weekly closing basis combined with the 104 area based on this trend line. So it's going to depend on these two levels right here as to where the dollar yen goes over the coming weeks. But as I've said recently, even if it does get above this 104 area, it needs to break above some of these recent highs in order to reverse this trend. Because notice how ever since February of 2020, the pair has been carving these lower highs. So as long as this is the case, I do like the idea of a lower dollar yen. It would have to come up, break above 104, and then take out some of these recent highs somewhere around 106. But at the same time, I don't love the idea of shorting the pair just because it has been sideways recently. And furthermore, it's going to take a weekly close below the 103 area to expose that 101 support area. Next up, we have gold, or XAUUSD. Now, I previously thought that this channel was positioned a little bit differently. So we had this area like this before, and based off of these two lows and this one back here. However, as you can see, it does appear that we have a new channel in play now, where if I use these two lows from back here, so we have this one and this one, you can see where the pair is still trading within this descending channel. So even though we've had this aggressive sell-off recently, I am still bullish gold over the longer term, and I do think that this pattern will break higher. Now, when that'll happen is anybody's guess, but it is going to take a break above this channel resistance in order for XAUUSD to head higher. So we would need to see it turn higher, move up to resistance and break that. We could come down, retest this 1780 area, and perhaps even retest the bottom of this channel. All right, so whether gold bounces from this area or comes down and retests the bottom of this channel, again, is anybody's guess. But all in all, looking at the last few years, I do think that this is going to break higher, and it is bullish for gold. Now, all of that said, if you are trading this, it's fine. But as an investment, and I said this months ago, cryptocurrencies, in my opinion, are a much better bet. Bitcoin has outperformed gold by a long shot, so has Ethereum, and also VeChain, which we're going to talk about next, but all of these have outperformed gold by a long shot, and I do expect those cryptocurrencies to continue to outperform gold. So again, if you're trading gold, that's fine, but as an investment, I don't think that anything can touch cryptocurrencies this year. All right, so with that said, again, the 1780 area is going to be support. If we see gold move below that, keep an eye on this channel support. As for buyers, they're going to have to break this channel resistance to re-expose 2015, followed by that 2075 top. And last but not least, we have a cryptocurrency VeChain, that's VETUSD. I was first talking about this and buying the cryptocurrency back here in June and July when it was trading right around 0.008. So it was just below a penny. And as you can see, it's performed incredibly well since then. All right, so from this 0.008 area, the pair is up over 200%. And I was also buying during this entire pullback. All right, so all through here, I was buying on all of these dips. And you can see here on the weekly time frame that the pair is challenging that 0.028 area. All right, so this region right here on a weekly closing basis is going to be critical for VET. It needs to get above 0.028 in order to confirm the breakout. You can see how last week failed to do that, and this week is trying to, so we'll see how Sunday closes. But I do think that the pair is getting very, very close to breaking above that 0.028 area on a weekly closing basis. And if it does that, 0.04, this 4 cent area, is going to be next in my opinion. Now turning to the intraday timeframes, you can see where VET is breaking out today. We have the short-term trend line that I've mentioned on Twitter a couple of times. You can see where today is breaking out. And this is that 0.028 area that's critical on the weekly time frame. You can see where VET is challenging that area right now. So the Sunday weekly close at 7 p.m. Eastern is going to be important for VET. Now, if we can get above this area just above 3 cents, I do think that the 4 cent area is next. And just looking at the daily time frame, all of this up here is just consolidation after breaking above this recent top. Okay, so you can see where this area just above 2 cents was resistance back here on the daily time frame. VET closed above it, retested that area as new support, and is now taking off once again. So if we can get above the 3 cent area or just above it, 4 cents is going to be next, followed by that 5 cent area. But all in all, I'm not interested in 4 cents or even 5 cents. I do think that VET is going to go much higher than that over the next 8 months or so. So targets of 50 cents or even $1 for VET this year would not surprise me at all. It has the potential to do that and perhaps even more. So we'll see how the next 8 months play out, but VET is just getting started here in my opinion. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.